Hi, I'm Kristin Duncan with Keller Williams Advantage Realty in Orlando, Florida, and today I want to talk about how much money you need to purchase a home. So one of the most common myths about buying a property is that you need a 20% down payment. This is a lot of money, so you do not need 20% down necessarily to buy a home. Some instances you do, but most people who purchase a property, especially their first home, are not putting down 20% of the purchase price. So you can put down as little as 3.5% in most cases. The most common types of loans used right now are an FHA loan and a conventional loan. And the FHA, you can put down 3.5%. Conventional, you can put down 3%, 5%, 10%, and it just goes up from there. So as you can see, you do not need 20% down to purchase a property. So in addition to your down payment, you are going to have to think about closing costs. Closing costs pay for things like your lender fees, taxes when you purchase a property, the survey that you have to get. There's quite a few things, and the seller is going to have their own set of closing costs as well, but we're gonna focus on buyer closing costs right now. All of those items I listed are closing costs that the buyer pays. Now, typically, the closing costs range between 2.5% and 3.5% of the purchase price. This is in addition to your down payment. So let's go through a quick example. If you have a $300,000 property, you're using a conventional loan with 3% down, that would be a $9,000 down payment. And in addition, you would have about $3% in closing costs, which is another $9,000. So in total, with a 3% down conventional loan, $300,000 property, you're going to be looking at a total cash needed to close of about $18,000. The bank is likely going to also recommend that you need a little bit in reserves, just in case someone loses a job or something bad happens. They're gonna like to see that you have a little bit of cash on the side in reserves. Now let's run through another example, an FHA loan. This one requires that you put 3.5% down payment, and the closing costs are just going to be a little bit higher as well, closer to 3.5% of the purchase price. So if we're using an FHA loan to purchase that same $300,000 property, you're going to have $10,500 or so in down payment, $10,500 or so in closing costs, which leaves you at $21,000. So if you have a $20,000 nest egg saved up, you should be in pretty good shape to purchase a property. Now, of course, there's other factors that help determine how much money you have to put down and how much your closing costs are going to be. And those factors are your income, your credit score, and your debt to income ratio. So again, I highly recommend, cannot say this enough, that you speak with a mortgage lender well in advance of purchasing a property. Even a year in advance is not too far ahead of time to speak with a lender. They're going to help you determine what type of loan to use, how much down payment you need to save up, and just all of the little details, what can help you optimize those parts of your loan. Maybe you don't need as much money down as you originally thought if you have a year to bring up your credit score or to reduce your debt to income. I hope this is helpful, and please let us know if you have any questions.